We are now still at Module 3. In Module 3, we talk about security market. And we already have Module 1 and Module 2. Module 1, we talk about stock. And Module 2, we talk about bond. Up to now, we have learned a lot about security investment. Before we start today, let me ask you a critical question. What is the nature of security investment? The question here is, what is the nature of security investment? From my personal perspective, the nature of security investment actually is 2R. The first R is return. To get return is the basic and fundamental and primary purposes for security investment. Another nature is risk. Yeah. This is the nature of security investment, the 2R. Hopefully you can remember the 2R even after this course. Next question I'd like to ask you, for security investment, what do you think the basic strategies in order to earn more return and in the meantime, less risk? The strategies. You may think that we have lots of strategies in security investment, but basically there are only two strategies, only two. The fundamental one. One is called speculations. Another is called value proposition. Speculations usually look at short term, while value proposition usually look for relatively long term. Whether short term or long term, they are looking for spread trading. The key for spread trading is, well, spread trading is pretty easy for us to understand, is buy low and sell high. Then we can earn the spread, right? This is the fundamental strategies for security investment. Yeah. In order for spread trading, we have three important levels for analysis. In order for looking for the opportunities for spread trading, we can do three-level analysis. First level, we can do it from market level. In Module 3, we are doing this from market level. In Module 1 and Module 2, we do it from product level. In the last module, module 5, we will also do this from portfolio level. A portfolio, also called investment portfolio, is usually a collection of different stocks or different bonds together in order to get higher return while in the meantime less risk. These are the 3 levels of analysis, or do spread trading. Therefore, after learning this course, I do expect you to have a further understanding about these 3 important questions. Very critical, very fundamental questions in security investment. Let's get back to slides. Today, we will complete the residual parts in module 3. And this part is critically important in terms of a market level return and risk analysis. Okay. These topics, we focus on the return analysis. After these topics, we will have another couple of topics which focus on risk analysis. You may remember that in Module 1 and Module 2, we have also done some of the return and risk analysis, but that is on product level. And here we are on market level. Someone may have a question. We study market level return and risk. That is okay. However, can we buy market index? Can we buy market index? The answer is no and yes. First, it is no because we cannot directly buy market indexes. We say yes because we can buy some of the special security products in market that follows market indexes. This kind of products is called ETF. ETF is actually an investment portfolio. Its movement closely follows that of market index. So we buy ETF is equivalent to we buy market indexes indirectly. So this means it is meaningful for us to analyze market return and market risk. From topic 13 to topic 19, we talk about market return. However, we talk about market return from 2 perspectives. The first perspective we have learned is called periodic return. Periodic return. Here we will use annual return. Of course, you can use weekly return or monthly return. And then the second perspective is we'll talk about holding period return, or holding return, or investment return. Still remember the critical differences between periodic return and investment return? Two critically important returns. Periodic return and holding period return. They are different because the method of calculation in these two returns are different. For periodic return, we are using rolling or moving windows. And for this one, we are using expanding windows. Therefore, the first big difference between these two kinds of returns is method different. Second is their purpose are different as well. For periodic return, fundamentally, we expect to find out the useful information. Useful information what? Of trend and its changes. We expect to know the trend and the changes of trend, right? So it focuses on trend. Well, for holding period returns, we are also looking for useful information. But this time, we focus on investment return. Or investment result. Here, investment return or results refers to at day one, we do an investment on either a security or a market index or a portfolio. After a while, after a couple of days, after a couple of months, even after a couple of years, what will be our returns? What will be our returns? So this is very close to our actual investment operations or investment activities. Now, it focuses on the result. The result of our investment activity. Therefore, in this way, whenever we analyze return, personally, I recommend you to use both. If you use both, on one side, you could have a better idea on the trend of returns. And on the other side, you can have a better understanding of our investment results. Suppose we invest at a specific day in the past. So in this way, we can have a better understanding about the value proposition. So from another point of view, the periodic return analysis is more purpose for do something before we make a decision to invest something or not. And this one is something like a back trace. That means suppose we do an investment in a specific day, what will happen? Or someone may use the word back test. Now let's get back to the slides. Topic 13. Let's do a quick periodic return analysis between Shanghai Stock Exchange and Shenzhen Stock Exchange. From this kind of analysis, what is our purpose? Or what is the questions in this topic? After we do such kind of analysis, what kind of questions can we answer? This is our topic question here. What are the differences between Shanghai Stock Exchange and Shenzhen Stock Exchange in terms of periodic returns? This figure tries to answer this question. Let's look at this figure. This way is still the dates. and this one is the annual return. From this word, we can quickly find out it's a periodic return. And the length of the period is 1 year. So that's why we call annual return. This is the percentage. The period is from the beginning of 2020 to July 2021. It's 1.5 year. The blue solid lines represents for Shenzhen Stock Exchange, and the orange dot line stands for Shanghai Stock Exchange. In order to analyze the movement of a stock exchange, we will use its market indexes. Here we are using the Shenzhen Component Index. Remember, it's a component index. And here we use the Shanghai Composite Index. Remember, here is a composite index. This one is a component index. Well, from this picture, we can quickly find out a couple of useful conclusions. In this period, we find that from annual return perspective, first one, Shenzhen Stock Exchange is higher. This is pretty interesting, right? Second, we find that although Shenzhen Stock Exchange is higher, but their trends are similar to each other. Short points. Although their trends are similar to each other, the spread, remember that return measurements are comparable, so we can compare their spread. The spread are changing. Or we say that their spread have been changing all the way. Here we have a big spread, while the spread here is almost close to zero. These are the three critical points we can find out from this graph. Okay. Return trend is actually a moving average. And remember, besides the annual return, we can also have quarterly return, monthly return, and weekly return. You may have the question, what are the differences between these returns? For example, let's choose the 2N. What are the major differences from weekly return versus annual return? Okay, let me explain. Annual return, first, its period is much longer, right? This is apparent. And weekly return is the shortest period. Annual return could find out long-term trend. While weekly return can only find out short-term trend. Annual return can suppress most of the occasional factors. Most of the occasional factors or fluctuations. While weekly return cannot do so. So you may still find out a lot of fluctuations. In this way, for a complete analysis, usually we can do the periodic analysis on return from different periods. We can do annual return, try to find out long-term trends. If we need to make a decision within a short time, we can also do a weekly return and a monthly return as well, in order to find out the short-term trend. Okay, let's look at our case script. We are still using the command we have been very familiar with, the compare security. I must tell you that compare security, this Python command is actually very similar to the previous one, compare stock. It's very similar to each other, right? And for this command, the first parameters is the objectives or the securities we expect to compare. This one is the code for Shenzhen component index. While this one stands for the Shanghai composite index. And this is a new measurement. It means a periodic return, and the period is 1 year. If you want to do a weekly return, you can change here to weekly or monthly. I believe you will find a different shape of curve. This is the period, and this is the start date. And this is the end date. Right? As we are in mainland China, we will be very interested in the difference between Shanghai Stock Exchange and Shenzhen Stock Exchange, especially this year. And we can update the start date and end date to this year. Let's do the case studies together. Copy the command here. Still remember how to execute a Python command in Jupyter Notebook? We press the Shift plus Enter key together. We have a star here, right? A star here. That means this Python command is being executed now. When the star disappeared, it means the execution of the Python command complete. Let's look at the results this year. We find that the conclusion is similar to the previous one. In terms of annual return, Shenzhen side is still higher this year, and the Shanghai side is still lower. Also, we need to be aware about this line. This is the zero line. Above these lines, that means our investment has a positive return. Below these lines, it means our investment has a negative return, means loss. This side means gain. And we find out that first point, Shenzhen side is higher, still higher. Second point, let's look at the big trend. Let's draw the trend first for Shanghai. Okay. This color is not that significant. Let's change one color to probably the green color. Okay. This is the trend in Shanghai. And please be aware this part is below zero. Okay. This is the trend for Shanghai. And then let's draw another trend for Shenzhen. Next time we use a different color. Too red. Probably this kind of colors. We use a thicker one. Okay. This is the part in Shenzhen. And in this period, it's close to 0, but still above 0. That is critically important. We can see up and down, up and down, up and down. Yeah, but in general, it's above 0. And it is higher than that of Shanghai. Okay, above 0. For investment, this is critically important. Third point, the spread between Shanghai and Shenzhen has been changing all the way. Here we have, here we have the same thing. Well, this picture is actually using the same period of return. It's a replay of the case in our slides. Now let's change it to, let's change the date to this year. Okay, we change here to 2022, January the 1st, 2022, July 22nd. Let's execute the command. And then we can compare what changes do we have between these two pictures, because they are using different period of time. This is from 2020, January to mid 2021. This is for this year. Let's look at this. We have a dramatic change on that. It's pretty interesting. This is for Shenzhen Stock Exchange. And this is for Shanghai Stock Exchange. We find that this time, Shanghai is higher. This year, the situation changed dramatically. Second, of course, they still have similar trend. Third, their spread has been changing. But the most important one is this year, in terms of annual return, Shanghai side is higher. This is the Shanghai side. It's higher. Okay. This is a very important thing we can find out from this graph. About the future, we don't know. We don't know yet. Okay. Let's get back to slides. This is the exercise we have done together. Well, we have another interesting question. Now, we have Hu Gang Tong. That means investors in Hong Kong can trade stocks listed in Shanghai, and investors in Shanghai can trade stocks listed in Hong Kong. And the question is, what are the differences between Shanghai Stock Exchange and Hong Kong Stock Exchange in terms of periodic returns? This also answers the questions, why investors in different places trade stocks in another place? Yes, this is our topic questions. What are the differences between SSE and Hong Kong EX in terms of periodic return? Well, this is the picture, but not most recent days. The period is still from January 2020 to July 2021, 1.5 years. And this is the zero line. Now we can see that this one stands for Hong Kong, and this one stands for SSE. From this picture, we can quickly find out that in terms of annual return, first, Shanghai side is higher. What about their trend? Are their trends similar to each other? In general, yes. In general, yes. But if we look into more details within a shorter period of time, their trends may not be similar to each other. And we can find out something about that. For example, here, the trends from short-term period, they're not the same, right? But in general, they are similar to each other. If you look at the big trend, the big trend is similar. You may ask the question, why? Because we have now 沪港通. There are lots of interaction between these two markets. Right? What about the situation this year? Let's do a case exercise together and see what is the situation this year. It's simple for us because we can simply change the period. We change this to 2022, January the 1st. We change this to 2022, July 22, which is today. Well, this is the differences between Shanghai Stock Exchange and Hong Kong Stock Exchange in this year in terms of annual return. Starting from January this year to today, we find that, okay, this is Hong Kong and this is Shanghai. Well, the situation is basically the same with that of the previous picture. Shanghai said is higher in terms of annual return. But considering from the relationship between return and risk, Shanghai said the return is higher, and we can have a reasonable imagination. Shanghai said its risk may be higher as well. Well, this is only our subjective mindset. We need to do something to prove our idea, and we will prove this in the risk part of Module 3. First point, Shanghai side is higher. And second point, their big trends are similar to each other, but their smaller trends within shorter period of time may not be similar to each other. Say, for these periods, it's not very much similar to each other, right? It's going down, down, down. It's going down, but quickly up, then down. Okay. So for these periods, you can do a spread trading. Spread trading. Sometimes we also call arbitrage. Arbitrage trading. And the third point, their spread does not change a lot. It's relatively steady. So from these two pictures, we can have a quick understanding about the difference between Shanghai Stock Exchange and Hong Kong Stock Exchange from the perspective of annual return. Yeah. Of course, in order for a complete analyst report, we also have to analyze the situation of risk, the difference of risk between these two exchanges. After this morning, I believe you can have a complete idea about that. Now, let's look at this from a global view. What are the differences in terms of periodic return among three countries? It means China, US, and Japan. So in this topic, we will compare the differences in terms of periodic return between China and US, China and Japan. And in this way, we can have a better global perspective. We can have a better global vision. The topic question here is, what are the differences among the stock markets in China, US, and Japan in terms of periodic return? The answers of this question will help us to set up a global vision on the differences of security markets in different countries. I believe you can write a small paper on that. It's pretty interesting. First, let's compare China and USA. In order to compare China and USA, we will use two market indexes for it. For China side, we use the Shanghai Composite Index, and for US side, we can use the Dow Jones Index. Of course, we can use Standard & Poor 500 as well, but here we use Dow Jones. You can do this case study again by using Standard & Poor 500 Index. Here is Dow Jones. This is SSE Composite Index. Well, this picture is pretty interesting. It starts from 2021 January and end at July the same year. It's actually only half year. We find an interesting point here. It's about March 2021. Before March, Shanghai side is higher, and after March, US side is higher. We have another point here. At this point, it is about the beginning of June. The two markets are almost the same in terms of annual return. So just by this picture, you can write a small or mini analyst reports on that. You can imagine something at these 2 points. What happens? Why before this Shanghai is higher? Why after that US is higher? Why they are close to each other here, right? And what will be in the future? You can do estimation or a forecast. It's pretty interesting, right? This picture compares between China and Japan. So for China side, we still use SSE Composite Index. For Japan side, we use Nikkei 225. And we find out that Japan side is higher in terms of annual return, and China side is lower. We have an important time point here as well. It's also March. It's pretty interesting. Before March, China side and Japan side are almost same. So these kind of curves, we call them relational twisting, right? Relational twisting. Okay. First, they are twisting to each other. Second, they are relational. Relational here means if we do a t-test on them by using Pearson correlations. Pearson correlations. We can find out that their correlation coefficient might be very high. Correlation coefficient be very high. So personally, I think it must be bigger than 0.6 and would be significant, at least 1 star. Right? At least 1 star, but probably 2 star or even 3 star. Or the correlation coefficient may be bigger than 0.8. 0.8 means strongly correlated, right? Strongly correlated. And bigger than 0.6, we can say correlated. With at least 1 star, we will say significantly correlated, right? If we have 3 stars, that means, well, strongly, significantly correlated. It's very interesting. Well, this knowledge we can learn from statistics, a course called statistics. I believe you have learned them or you will be learning them. Well, this is the Python command. This is for Dow Jones index. This is for SSE composite index. This is for Nikkei 225. Well, the period is actually the first half of last year. And now we expect to know what are the situations this year. Okay, the differences between China and US, China and Japan. Now let's do a quick case analysis on that. Okay, before we do the case analysis on that, let's have a 10 minutes break. See you after the break.